Chapter 8, Candle Formations. So in this chapter, I'm going to explain to you the 3 different types of candle formations that we use to identify trades and also identify potential reversal areas in the market. The 3 main candle formations are railroads, which sometimes I'll label as just 2 capital letter R's, as you can see right here. Rockies, which are 3 or more candles. We're going to go into examples of that soon. And shift candles, which I might label as SC. Shift candles are EMA crossover. It's an 8 and 13 EMA crossover. So the first 2 candle formations take place strictly by reading the candles. The EMAs will have already been in trend. The shift candle is a candle formation that is confirmed by the cross of the EMA behind it. So let's start with railroads. We're going to break each one of these down piece by piece. I'm going to show you a lot of examples, and then by the end of this chapter, you're going to be able to identify these railroads, Rockies, and shift candles in the proper areas where we're looking to trade to confirm or deny entry of a trade. Railroads. So railroads are always going to be no more than 2 candles on the 15-minute chart. That means no more than 30 minutes. The way that we use railroads is to identify that the pullback of the overall trending move is complete and we are now moving back in line with that overall trend. The railroad will be confirmed on the TDI by the RSI crossing through the liquid 50. So the railroad is going to be on the candles, but it will be confirmed for entry, and we're going to go into the entries in a little bit, but it will be confirmed by that TDI. So if you look at a chart, you're going to see a bunch of railroads in every different direction. I'm looking at a chart on my other screen as I record this. There's tons of railroads if you really define it just as simply as 2 candles, 30 minutes, the pullback is now complete. I could say here's a ton of railroads. Yes, but for our definition of a railroad, for the way that we use them, it needs to be confirmed by the RSI crossing through on the TDI in the proper zone. So we're going to show you some examples of that in a second, but understand that there are railroads everywhere, everywhere. You just need to identify the correct ones. Like I said, the railroads are confirmed by the TDI where the RSI, the green line, crosses through the liquid 50 in the proper zone. So here, if we had railroad examples above on the candles, where the RSI comes through the liquid 50 in these 3 pink boxes, those would be areas where railroads could occur that we would say, yes, these are valid ends to the pullback. It's time to get back in trend. This is what a typical railroad will look like. The reason that it's called a railroad is it almost should seem as though price has now created railroad tracks for the trend to continue. So as you can see, reading these candles left to right, just in this example here, the first candle inside the pink box, it opens here because we know this is a bullish candle, opens here, closes at the top, opens here for the next candle at that same price level, wicks high, and then comes straight back down, making this right leg of the railroad, the second leg of the railroad, longer than the left leg, the first leg, saying, okay, not only did we go back through the price we started the consolidation at, but we actually set a new low, which is a continuation of this overall downtrend, because you can see in this example, just in this small photo, that the EMAs are pointing down, which would tell us we're in a downtrend. So the fact that the right leg is closing lower than the first leg is a valid sign. And if we were in an uptrend, we would just look for the inverse of this, where the right leg would close higher than the left leg. That's how you know that the consolidation of all here, so we have 1, 2, 3, 4, 5 candles, 5 15-minute candles here of consolidation back to the 8 and 13 EMA. This consolidation is now done all within 1 bar. It broke for a new low. So even if you look at all of these candles as a consolidation zone, because that's really what the railroad essentially is, it's just an end of the consolidation, you can see that this right leg sets a new low out of the consolidation, and that's something that we would look for an entry on a shorter time frame. Now here's 2 examples of railroads on a chart, on a 15-minute chart blown up. So you can see when the RSI comes through the liquid 50, we are in the buy zone, you can see the numbers. When the RSI comes through the liquid 50 and it's above the trend line, and you get, first in an uptrend, you're going to get a bearish candle down and then a bullish candle that retraces and makes a higher close than the first leg. That's a qualifying railroad. You'll also see here again, starts with a bearish candle, comes back with a bullish candle that closes higher than the bearish candle as the RSI comes through the liquid 50 is above the trend line in the proper zone. So the railroad, the right leg must close higher, right? And the RSI must be coming through the liquid 50 and above or below the trend line in the proper zone. This is kind of what I was saying when I was explaining that you'll see railroads everywhere. You could look here and say, Austin, isn't that a railroad right here? No, look at the RSI. It's floating in nowhere, no man's land. You don't need this. This is not a trade. How about this one, Austin? There's some type of a reversal going on in here, isn't there? Yeah, absolutely. We're going to go into this in a second. This is more of a rocky formation than it is a railroad because this required 3 candles or more to make the reversal. These 2 candle rockies are just pullback, continuation of trend. You see we're in an uptrend, so you get the pullback, then the continuation of the trend. The right leg has to close higher in the uptrend. That's telling you, yes, we are clean to break out for new highs. You can see this railroad right here that I have boxed in broke for a new high of day. You can see here's the start of day. This railroad right here, as the RSI came through the liquid 50 and above the trend line in the right zone, this railroad broke for a new high of day. That's a great breakout signal. And look what happens. A clean move long. That's over 25 pips right there. I could calculate that very quickly just by looking at the price. Let's do another example. Here you'll see another railroad, this time in a downtrend. So here we need the right leg to close lower than the left leg. And that's exactly what it does here, as the RSI comes through the liquid 50 in the sell zone. You can look back at this chart and see tons of these reversal formations. I'm hoping you start to see. You're going to start to say, well, Austin, what would this be right here? And how about this? And how about this? How do we catch all these moves? Well, I'm going to show you. The railroads are only one structure formation that we look to use. And now I want you to hopefully fully understand that when you're identifying a railroad, there's 2 main parameters that need to be met. One, if you're in an uptrend, you want the right leg to close higher, and if you're in a downtrend, you want the right leg to close lower. And the RSI must always be coming through the liquid 50 above or below the trend line in the proper zone. I'm going to repeat it the same way, hopefully, so it just gets like subconsciously drilled into your head. Another example here, in a downtrend, we're under the EMAs, right? Liquid 50 in the sell zone, we're looking to sell this pair. You can see the railroad comes to the 50 EMA, closes there, opens, and drops straight back off of it, creating a new low, making this right leg lower than the left leg of the railroad with the RSI coming through the liquid 50 in the sell zone. A clean railroad off a very strong EMA. That 50 EMA, the water, this light blue line, that's a strong EMA compared to the 13 or the 8. So the fact that it pulled all the way back to there and threw the entry signal off of that is a great indicator that this is going to be a good trade. It only is confirmed, remember, with the RSI coming through the trend line in the proper zone. It's only confirmed, remember, when the RSI is crossing through the liquid 50 with the trend line in the right position and the entire TDI in the proper zone. It's a couple different parameters that need to be met, but I'm hoping that by me repeating it and repeating it and repeating it, you're understanding. It's the RSI crossing the liquid 50 in the trend line position correctly, in the proper zone correctly. So let's get into Rocky formations. Rockies are always going to be 3 or more candles with either a doji or hammer candle in the middle. Rockies and railroads are basically the same thing on paper by definition, because what they both represent is that the accumulation, the consolidation period is over and the trend, the overall trend, is ready to continue. So when you start to trade these Rockies and railroads, don't get too picky as far as like, oh, this is a Rocky, this is a railroad. No. Identify it. Does it actually break out? Does it meet the parameters that it needs to meet on the TDI, confirming that this is an end to the pullback? Well, if it does, then you're fine. It doesn't matter what you call it. I don't want to get hung up on the semantics of the trading. I want you to understand that Rockies and railroads on paper are the same thing. They both represent the end of the accumulation period, the end of the consolidation, and show us that we're ready to break out. Show us that we should be looking on a smaller time frame, the 5-minute or the 1-minute, for a proper entry signal. The reason we call them Rocky formations is because it almost looks as if it's Rocky Balboa standing at the top of the Art Museum steps, putting his hands up, screaming for Adrian or whatever he was screaming for. It's just a stupid analogy that we use to label these formations, but it makes it really easy to spot them because it almost looks like you're looking for the head, Rocky's head right in the middle, which is either your doji or your hammer candle, and then the 2 arms are his arms above his head. It can be inverted as in the photo in front of you, but if you flip this upside down, the head would be at the bottom, the arms would be pointing up. That would tell us that the trend is going to continue up. You always want to try to follow his arms, follow the rocky arms. In this example here, the arms are pointing down. That tells us that the trend should continue to go down. In a downtrend, the closing leg of the Rocky will always close lower than where the first leg opened. And inversely, in an uptrend, the closing leg of the Rocky will always close higher than where the first leg opened. That's just the same as a railroad. Just like we said, the right leg of a railroad has to close higher in an uptrend and lower in a downtrend. The same thing applies for Rocky formations. So you can see here, Rocky formation off the 13 EMA. You're going to see this a lot. You can see the RSI holds through the liquid 50 and is crossing back down through the trend line at the close of the Rocky. That would signal to us that this trend, this downtrend, is going to continue. You can see prices have been falling all day, pulls back to the 13 EMA, but bodies right down through, and then we get a continuation of that move down. Again here, another Rocky formation off the 13 EMA with the RSI in the correct position. Now, you're going to start to probably pick this up and say, Austin, how am I going to trade all this? And this doesn't look like a huge move. What are you talking about? We're not talking about entries yet. Just stick with me here. I'm just still teaching you the formations, what I need you to see the market as, and understand when we get to the entries in 2 chapters from now, and I'm walking you through what a good entry is and a bad entry is, then you're going to understand, oh, I would trade that Rocky formation. Oh, I wouldn't trade that Rocky formation. Oh, and this is why. Again, another Rocky formation in a downtrend here. You can see the liquid 50 was in the sell zone all day. EMAs were saying to sell. Your candles are dropping, pulls back to the 13 EMA. Right leg of this 3-candle Rocky closes lower than the opening leg. RSI coming off the liquid 50 and through the trend line in the sell zone. It's perfect. You know that you're going to get at least 1 or 2 15 or 30 minutes of drop. You're able to catch these continuations of the trend. What it tells us, guys, is that this slowing, this accumulation right in here, 1, 2, 3, 4 candles, all that is done, and we're ready to break out for new lows. More Rocky formations again. Now, not all of these are tradable because of their RSI positioning, like this one down here is oversold, but I want you to start to identify them with your eyes. In a downtrend, I'm looking for a bullish candle up, doji or hammer, 1, 2, 3, however many it is, and then a bearish candle down that closes lower than the opening leg. Same thing here. Bullish candle up, hammer in the middle, bearish candle down, closes for a new low. RSI coming through the liquid 50. That's a nice looking Rocky. This one, not so much. Look where your RSI is. It's all the way down at 30. You wouldn't be taking this short. And then again here, Rocky formation. You have the bullish up, bearish down, bearish down. In 15 minutes, it shoots up, and then within 30 minutes, it retraces that entire move, saying pretty much, okay, I went up, got what I needed, and now I'm ready to continue the downtrend. Is this tradable? Not too much, because look at the positioning of your RSI. It's all jumbled up. We're going to get into this in a second. I don't want to get hung up on the tradable versus not tradable. I want you to focus on, again, the formations, solid formations. In a downtrend, you have the push up, the hold, and the move for a new low. Now let's talk about shift candles. I said already that the shift candle, by definition, is the 8 and 13 EMA cross. We use this to identify shifts of a zone, meaning we're consolidating, and then boom, we want to move higher and we get a shift out of a zone. If you're looking to go long with a shift candle, the RSI must be crossing through the liquid 50 in the buy zone. The RSI must already be above or must be crossing through the trend line at the same time as it's crossing through the liquid 50. Write that down. RSI must be crossing through the liquid 50 in the buy zone and must be above or crossing through the trend line as well in order to go long. Here's an example of exactly what I'm talking about. Within this candle, you can see the 13 and the 8 EMAs come tight together. The ketchup and the mustard, the red and the yellow, come tight together behind the candles, cross down here, and cross back up within this candle right here as the RSI comes through the liquid 50 in the buy zone above the trend line. The trade is based off the RSI. I want you to see it on the candles, confirm it on the candles, but the trade is based off the RSI cross. The candles are just going to ride this strength. I want you to think of it that way. The RSI stands for relative strength. It's crossing and riding this strength. That's what the candles show us. A couple more examples here. RSI is what I want you to look at first. You see the RSI coming through the liquid 50. Is this a solid shift candle? Maybe. We'll talk about it in a second. RSI again coming through the liquid 50. Is this a solid shift candle? Let's talk about it. How about this one? RSI coming through the liquid 50 and the trend line. Is this a solid shift candle? Let's talk about it. So the first one here, is this a solid shift candle? When you're trying to trade, and as we get into the S2 entry examples, you're going to see that when the EMAs come tight like this, you want to trade only if it puts a body through the EMAs, meaning it pushes so hard through that it does not have to leave a wick, that price can actually close above that exponential moving average. And you can see in this first example that it actually does. That body closes above the 200, the white line, the 200 EMA. The next 1, 2, 3, 4 candles go straight up. That's a proper shift candle. Again, here we have the RSI coming through. You have now already above the 50 and the 200 EMA, another shift candle. And what happens from here? A little bit of consolidation, but it holds the 13 EMA and continues to move higher. All based on the RSI crossing through the liquid 50 in the buy zone. The RSI never comes down through until right here, when again, it decides to hold and turn back up, throwing another shift candle. This shift candle, however, closes for a new high of day. How much do you think I like that one? 10 times more. So when you have a shift candle that can close for a new high of day with the RSI coming through the liquid 50 in the proper zone, I'm a happy boy. That's exactly what you want to see, and look what happens. 1, 2, 3, 4, 5 candles straight to the moon. That's 20, 30 pips right in this move right here. So again, for a shift candle long, you're looking for the RSI to go through the liquid 50 in the buy zone with the trend line in the proper position. If you're trying to go short with a shift candle, you're going to be looking for the RSI to confirm it by having the RSI cross through the liquid 50 in the sell zone with the trend line in the proper position. You're starting to see that it is the same pattern, just inverted. So here we have a 8 and 13 EMA cross through with a nice body through the 50 EMA as well. And the RSI in the sell zone, not oversold yet, coming through the liquid 50 under the trend line. That's a solid shift candle. What happens? We shift the zone and we get drop all day. So when you see these shift candles, they're very powerful. Long or short, it doesn't matter. And they have to be confirmed by what you see on the TDI. You need to have the RSI crossing through the liquid 50 in the proper position in order to have it be a solid shift. You'll hear me reference in the VTF all the time. People will say, Austin, is this a shift candle? What do you think about this pair? I'll say, no, that's a floating shift. That means that it's not crossing, it's not confirmed on the TDI. It's not crossing through the liquid 50. We don't want to trade floating nothing. You want to trade solid ground, solid structure in the market structure we talked about a couple chapters before. You want to trade on solid shift candles as well, which means that it's crossing through the liquid 50 in the proper zone. Another example here, we have a shift candle short, liquid 50 in the sell zone, not too deep into the sell zone, pretty close to reset, but you get a shift candle through the 800 EMA, through the 13, through the 8, and off the 50 as well. So 4 EMAs bunched up, shift candle through. How do I know that that's when it's going to break out? How do we know that that is when the drop is going to come and not back here? It's because the RSI crosses the liquid 50 and the trend line at the exact same time here. That sometimes we used to call this a trifecta cross just because we were corny, and again, you know my stupid nicknames by now are pretty dumb. But you can see it's all 3 lines, trifecta, right? Crossing at the same time. And that was like the beautiful cross. That was the money maker. That's what you want to see. So now we've gone through railroads, shift candles, and Rockies. You should understand that these candles have to be confirmed on the TDI. If the RSI is not doing what you need it to do on the TDI, then those candle formations are not valid. You can see them all day, everywhere, upside down, I don't care. It has to be confirmed on the TDI. Otherwise, it's just irregular movement to us. I want you to block all the other stuff out and only find confirmed trades by matching the candles to the TDI. Now, in the next chapter, I'm going to quiz you on everything that we've gone through so far. So I hope you're ready. Now let's get into the quiz.